In 2018, Amazon paid no federal income tax on over $11 billion worth of profit. What's up, peeps? This is Todd, and welcome back to my show. And today, we're going to discuss how the rich can pay zero taxes legally. If that sounds good, let's hop into the video. So one thing that Amazon does incredibly well is they are very savvy with their use of revenue. Amazon, along with many other wealthy companies and wealthy individuals, they take most of their revenue and they reinvest it back into their company. For example, let's say you have somebody with a YouTube channel, and from that YouTube channel, they make $1 million every single month. At the end of the year, they've made $12 million, and they would have to pay federal income tax on that, unless they take that $12 million and they invest it in Facebook and Instagram ads promoting that YouTube channel. Now, all of a sudden, that $12 million of revenue they brought in, it's now being rerouted to real business expenses, which can be written off. Now, Amazon has been self-funding for years now, and essentially what that means is they have a lot of free cash flow. This strategy of just taking all the revenue and reinvesting it back into the business, this is how Amazon got so big so fast. This strategy is what helped Jeff Bezos eclipse his arch rival Barnes & Noble. Even in my own situation, I can pay zero federal income taxes legally on all my real estate because of my depreciation schedule, but also because I always reinvest back into the business. My wife and I tend to buy real estate every 12 to 18 months, so whatever money we make from our company, we pretty much take all of that and we buy the next property, which of course reduces our tax liability. Now, Amazon invests so much money into itself that some years, on paper, they don't even take a profit, and they can carry forward that loss into the next years, which of course reduces their tax bill. Now, another way that the rich pay no taxes is through tax credits. In one of my earlier videos, I mentioned that my wife and I are looking at an apartment building at a working class suburb of Seattle called Tacoma, Washington. This specific apartment building happens to be in an opportunity zone, and what that means for me is that the property taxes on this building would be waived for the first 12 years. Now, for this particular building, property taxes would be around $30,000 per year, meaning that I would save well over $300,000. Now, individuals with much more money than me and companies with a lot more money than me, they can take advantage of similar tax credits. For example, if a company like Amazon wants to open up a new headquarters in another state, that state's government might offer Amazon some tax abatements. That is because Amazon is great for the economy over there, and they want their business. A company like Amazon will create more jobs and more housing, and when there's more good, high-quality jobs, that is better for that state's local economy. Now, rich individuals understand that states want to have their economies grow, so they can take advantage of these massive tax credits, similar to the one that I'm looking at in the greater Seattle area, but on a much larger scale. Now, another brilliant way that corporations are able to get away with paying zero federal income tax is they use a strategy called stock-based compensation. Basically, it allows corporations to pay their employees using stock, and then take the value of that stock off of their tax bill. So imagine if you're a company that's rapidly growing, and you pay the majority of your executives with stock-based compensation. If you're a company that's been growing rapidly, that means the price of your stock is probably going up in value, so that high-value stock can now be deducted for tax purposes. So the controversy behind stock-based compensation is that there is a huge difference between the value of the stock when it's offered to employees versus the value of stock when it's actually sold. So for example, Amazon gives their executives the right to purchase a set number of stocks for a set price. Now, if the price of that stock goes way up, the company is then allowed to write off the value of that higher price. In Amazon's case, in 2018, they were able to deduct $1.1 billion simply because they used stock-based compensation. Now, before we get way too far ahead of ourselves, we should recognize that wealthy people and big corporations, they do pay other types of taxes. There are state taxes, local taxes, international taxes, and some federal taxes. What we're specifically talking about in this video is federal income tax. With my small real estate operation, I'm able to basically pay zero federal income tax as well because of my depreciation schedule. Since I'm allowed to take depreciation, the first $250,000 that I make from real estate, I get completely tax-free. Now, what's crazy is less than 4% of American households earn more than $200,000 per year. So that means for my situation, my tax break is more than what 96% of Americans make. Now, there are a lot of people who think that would be unethical and unfair, but what would it actually mean if wealthy individuals and big corporations paid more in taxes? What's important to remember is that Amazon is paying all of the taxes they are required to pay. They just understand the loopholes, and they also know the workarounds. Now, although that might seem like I'm singling out Amazon, their situation is not unique. Big companies like Netflix and General Motors and many other corporations take advantage of the same tax loopholes. So one of the biggest problems that this can create is individuals and corporations with the most resources oftentimes have the loudest voice. I don't want to get too political in this video, but it's actually not that difficult for a wealthy individual or a wealthy company to lobby or buy a politician to pass laws that would benefit that person or company. In 2018, Amazon mentioned they might be moving to New York for their second headquarters, headquarters. And the governor of New York offered them $3.5 billion in tax breaks. So it's safe to say that people and corporations with a lot of money can use that money and power to their advantage. Now, there were a lot of people in New York City in 2018 who didn't like that. They didn't like the fact that Amazon was going to get a $3.5 billion tax break. So they protested and complained and took to the internet and the streets and marched. And then what happened was Amazon bowed out of the deal. Now, this small group of progressives, they took that as a victory. But what did it actually mean for the economy of New York City? Well, when Amazon had planned to build their second headquarters there, they wanted to bring 25,000 jobs to New York. And these weren't low-paying jobs, by the way. The average annual salary for those 25,000 jobs was going to be $150K per year. So because a handful of really passionate and angry people were mad about the fact that Amazon was going to get some tax abatements, now that city is without those 25,000 high-paying jobs. Even Donald Trump, who very openly dislikes Jeff Bezos, said that this deal was a massive loss for New York City. So with social justice movements that get these small victories, they really need to think about what is best for the people there. It is quite possible that big businesses are getting tax breaks, but if that means if more good jobs are in that economy, is that a fair trade-off? Now, that's not for me to decide, but I would absolutely love to know what you guys think in the comment section. But basically, this is how the rich pay no taxes. They reinvest their revenue, also known as self-funding. They use tax credits, they take advantage of stock-based compensation, and they use a depreciation schedule. Well, I hope this video was informative to you, and I'll see you guys at the next one. Peace.